Hey students, this example is for cost of goods sold. So what I'm going to do is I'm going to go through an example with FIFO, with LIFO, and with weighted average cost. So what I'd like you to do is try to work out, either pause now, look at the information on the page, try to do all three by yourself. And what I want you to do for all three is figure out the cost of goods sold, the ending inventory, the journal entry that you would do for the sale. You don't have to do all of the purchases, but the journal entry for the sale and recording cost of goods sold. And I want you to also calculate gross profit. So as a reminder, gross profit is going to be your sales revenue less your cost of goods sold. So remember, sales revenue is how much people are willing to pay us for things. Cost of goods sold is how much it cost us, right? And the difference between the two is called gross profit. Okay, so I'm going to do FIFO first. So you can either hit pause and just do FIFO and then come back and check your answer, or do all three and then come back and check your answer. Okay, so I'm going to move on now to FIFO. Okay, so with FIFO, what you need to remember is that the first ones that we bought are the first ones that we sold. All right, so we know we've sold 220 units of the 300 units I have available for sale. So I'm going to start at the top and start moving into cost of goods sold. I'm going to put a column here for cost of goods sold, column for ending inventory. Okay, so I know I want this first 60, so I'm going to move that 600 over. I know I want the next 90, okay, so now I'm up to 150, and I still need to get 70 more, right, because 220 units minus the 150 I've moved over is 70. So 70 units times $13 is $910. Right. So remember, we've broken this now apart into 70, and then there's 30 left there. All right. And so ending inventory, I've got to take what's left. So I'm taking the 50 at 800, right? Because if we had 300 available for sale, we sold 220, that means we have 80 units left. So we have 50 at $16. That's why I've moved the 800 over to ending inventory. And then this purchase on August 15th, we moved 70 over to cost of goods sold, but 30 we left in ending inventory. So 30 times that $13 is $390. Okay, so let's see if the math works. How can I check myself? I can add up my cost of goods sold column, and I can add up my ending inventory column, and I can see if they add up to what was available for sale. So with ending inventory, I have a total of 1,190. And I'm using my handy dandy calculator. That means cost of goods sold, I have 2,500. Right? So if I add 2,500 and 1,190, yes, I do in fact equal my total cost of goods available for sale. All right, so now let's record the journal entries. We know our cost of goods sold was 2,500. We know our ending inventory was 1,190. So we've got the different pieces we need. So when I actually do the journal entries, let's assume my customer paid me cash. So I'm going to debit cash, and they bought 220 units times $50. All right, so 220 units times $50. That's what people paid me. So they paid me $11,000. And I'm going to credit service revenue for that amount. Right? And so remember, this entry is the same regardless of if we're using FIFO, LIFO, weighted average. What people pay us is always our service revenue. Okay, but now we've got to record that entry to the cost of goods sold. So remember, throughout the month, I've been buying this inventory, debiting the inventory account, crediting cash or accounts payable, depending on how I paid for it. I'm at month end now, and all I'm doing is updating it for what I've sold. So I'm going to debit cost of goods sold, which remember is on the income statement, for the $2,500 I calculated above, and I'll credit inventory for $2,500. Right? So if I had 3,690 in my inventory, I've now reduced it by the 2,500, leaving that ending inventory of 1,190. Right, then the last piece I asked you to do is calculate gross profit. So if we look at our journal entries, we see that our sales revenue, I called it service revenue above, but you can think of them as interchangeable right now, 11,000. My cost of goods sold, I can see both from my journal entry and from my table, was 2,500. So that means my gross profit, let me do the math because I can't do it in my head, is 8,500. All right, so I want you to pause there if you got it wrong. Take a second, look to see what you might change. And now I'm going to move on to doing the same exercise for LIFO. All right, now we're at LIFO, right? So with LIFO, we always want to assume that our last ones in are the first ones we've sold. So remember, we've sold 220 units, so I'm going to start moving over, right? So I'm going to put a cost of goods sold column. I'm going to put an ending inventory column, and I'm going to start moving things over. So 50 units, yep, I'm going to move that over. Next 100, yep, I'm going to move that over as well, but I'm only at 150 now. I need to get to 220, so I need to pull 70 out of this March 2nd packet. So I'm going to pull 70 out and leave 20 behind. So 70 units times $11 is 770. Now, what do I do with this last 80? Remember, those 80 are staying in my ending inventory. So I can take the beginning inventory, move it over to ending. That's 60 units. And remember, we left 20 units behind in this March 2nd purchase. So I'm going to move those 20 units over. So 20 times 11 is 220. And now I'll add up these columns. And let's see, I hope that this equals what I think it should, which is the total available for sale. So I've got ending inventory of 820. If I add up my cost of goods sold column, let's see if I can get this right. I've got 2,870, and hooray, those two numbers do equal the above. So again, now we've done a good job. We've got our cost of goods sold. We've got our ending inventory. We're ready to make some journal entries. So hopefully you figured this out by now. When we sell the units, remember, that entry is always the same. So I'm going to debit cash. Oops, I forgot to write the word debit there. I'm going to debit cash because I'm assuming my customer paid me cash. And again, same as FIFO, 220 units times $50 equals 11,000. I'm going to credit sales revenue. I think on the other page I wrote service revenue, but again, as long as you've got the word revenue in there, you're getting the hang of it. And now I want to do the journal entry for recognize the fact that some of my inventory's gone. I've sold it, and I need to recognize the expense. So I'll debit cost of goods sold. Remember, what's that on? That's on the income statement. And I pick that up from the table above, 2870, and I credit inventory, right, which is on the balance sheet, and I'm lowering my inventory. If I looked on the balance sheet, what number on this page do you think I would see for my inventory at the end of the month? Well, if you guess this 820, you're right? We've calculated above, but it's also what all these journal entries end up having the impact be. So your balance sheet ends up with $820 of ending inventory. Now, if I look at gross profit, I'm going to take the sales revenue. My stylus is working weird. Sales revenue, 11,000, less the cost of goods sold, right? What it cost us. And the difference between those two is 8,130 of gross profit. All right, I have a feeling you are like, yeah, this is just getting super easy for me. So let's do the last one. Let's do the weighted average cost. All right, so weighted average, oh, my math is so much easier. I'm going to do a one-time calculation of my weighted average using the totals that I have available for sale and the total units. So if I do that, that is 3,690 divided by 300 units. So my average cost is $12.30. Let's do a quick gut check. Okay, that average cost should be between my lowest and my highest. Yep, it is. That makes sense. If I'd done something like $25, well, that should be a red flag. I've done my math wrong. All right, so same fact pattern. Now I've sold 220 units. I apply that $12.30, right, from above, and that's going to equal cost of goods sold of 2,706. Right, I could also say, well, let's figure out ending inventory this way. Multiply the 80 units left by the $12.30, and I come up with $984. What do we know has to be true? If I add up my cost of goods sold and my ending inventory, they have to equal the available for sale. All right, so last set of journal entries. We're going to debit cash. This is where we've sold the items for $11,000. Now remember, that's the 220 units times the $50 people paid us. We're going to credit sales revenue, right? And the key word I want you to pick up, there's revenue. We're earning money, right? 220 units times $50. So again, 11,000. And I need to make my cost of goods sold. So I'm going to debit cost of goods sold, which is on the income statement. And I picked it up here from above where I did the math. That's 2,706. I credit my balance sheet account inventory, 2,706. Voila. I am ready to do, I've just got a little bit of room down here, my gross margin. So if I do revenue, 11,000, less cost of goods sold, 2,706, my gross margin, right? And this is my profit that I'm making, $11,000 plus 2,706. I end up with a gross profit of 8,294. All right, hopefully that's making sense to you guys. Thank you so much.